future reference. We are on record now. So there are two things that I want to talk about tonight on XAUUSD is my entry models and my risk model. You get my entry models and my risk model. So let me quickly use this. I want to make use of the text stuff to put something on the screen. You understand? Before we go to the chat. So yeah, firstly, I'll talk about my entry models on good. My entry doesn't change for every other pair as well, but most especially I love them playing out on good a lot, XAUUSD pair, because of the crazy movement good usually give me, Before I could probably eat 1 to 3 on currency pair. On good, I've done 1 to 5, 1 to 7, 1 to 8. So because of the volatility, that's why I love trading good a lot because I love fast results. You get, which is very, very good for me. I've been trading good now for over a year and 1.5 years plus. I've been trading consistently. When I say trading good, it means consistency, not just like, okay, I'm mixing it with some other pair. Yeah, I've been trading good consistently for over a year and 6 months now. Let's say a year and 7 months, because I've been trading good since December 2023. That was when I've been trading good actively. So yeah, a year and some and 6 months yeah now. So yeah, let me quickly move to my entry models on good. So which is basically what you all know. The OB. OB actually means the order block entry. OB entry. And of course, the second one is the what? Breaker block entry. Breaker block entry. What's this command? Breaker block entry. Breaker block entry. Please that one that is writing on the screen to stop. Breaker block entry, which you can consider as BB, breaker block as BB. You understand? So let me quickly show you the schematic, like the textbook markup of these two entry. So yeah, when you have first thing you have to do is you have to deal with structure, right? Structure is what is going to make you profitable a lot because if you get the structure correct, you should not be bothered about where the market is going or where the market is coming from. So let's say we have an uptrend now, right? And we've considered our liquidity. Tonight is not liquidity class, you understand? So we consider our inducements, and this is a simple breaker block entry. This is a simple order block entry. And when you have a valid break or structure, you have to have a valid break or structure. So price is very, very fractal. So you can find this particular markup in any time frame. It might be 1 hour time frame, 4 hour time frame, 30 minutes time frame, 50 minutes time frame, 5 minutes time frame, 3 minutes time frame, any time frame you actually wish you want to trade on. You understand? You can, if you, the moment you saw this pattern, you can just do what? Go ahead and execute it. So you have to see a break or structure, and after a break or structure, you have to see an inducement. Which is this IDM. So yeah, the other block responsible for the break or structure is where you pick your entry from. You get, so the moment you see your other block, the moment you see your inducement here, your other block will be left behind. So you pick your entry from the other block. Stop loss a little below the other block, the candle that form the other block, right? And target to at least the previous high or 1 to 3 as per my own entry. So sometimes on good, I always target 1 to 5. 1:5. So it's just these days I've been reducing it to 1 to 4, 1 to 3. Sometimes if I actually see that the price is not that moving like that, there is not enough volatility when the market actually kick off. That is why I'll just close at 3 hours, 4 hours sometimes. But basically my rule on good is 5 hour TP. That's my own rule on good right from the beginning. So this is the order block entry. Let's name it order block entry. Let me put OB. You all know that block as OB now, right? OB entry. So the second one is breaker block. That is when another block fail. You have something like this, break or structure inducement. Inducement creates something like this. And instead of it to respect this zone, it doesn't respect it. So it break aggressively to the downside. That is when you now pick your entry from the breaker block and you sell. So that means you are trading against the trend when you are against the original trend when you want to trade a breaker block. So this is a breaker block now. Basically, another block that fail is what we call a breaker block. So that's just it. So these are the two entries that I always make use of when I'm trading good. When I'm trading good, and we are going to see them on the chart as well. We're going to see them on the chart. This is a break considered to the upside, and this is what I call inducement, right? This is the inducement, structural liquidity, anyhow you call it. Still the same thing. I use it as inducement. So the moment you see that market break aggressively, violate your other block, just know that this other block, market is still coming back to mitigate it because it's now turns to a breakout block. So you now wait for it at the main entry. You can just extend your box and you wait for it there. You use your stop loss to cover a little above this particular candle, the same candle, a little above it, and you target 1:4, 1:5, you get on good. Or if you are satisfied, you want 1:3, you can just go with that. So this is the two type of entry that I trade on good. That's my entry models, which is this breaker block entry now, other block entry, and breaker block entry. So simple as that. I don't complicate things. The only thing that I always look at is when market reach a particular zone. If I actually want to wait for candlestick confirmation, probably a bearish engulfing, a evening star, like all these candlestick reversal. If you have read my candlestick ebook, you understand this. What I mean by candlestick confirmation entry, like candlestick entry confirmation. So go and read this ebook. It's actually there in our Telegram channel. Go and read, just go to the pin messages. You are going to see it there. Simple trading ebook. That's this simple trading book. So just go there and read it. Read about candlestick pattern. You understand candlestick confirmation. Like when you see that type of candle that printed on your POI. This is what we call POI. So basically the strategy is structure plus liquidity, liquidity, liquidity plus entry. That's just it. Entry or POI, you can call it POI, you can call it AOV, area of value, anything. Just know that, okay, I just use my own as entry. So basically what I trade as my strategy is structure, liquidity, entry. The structure in the sense that, okay, is it an uptrend? Is it a downtrend? Fine. Liquidity is, okay, do we have an inducement very close to our POI? Yeah, we have it as liquidity. And entry is, okay, where is our entry? Is it other block entry or breaker block entry? So that's basically the strategy. And these are the two entry models that I trade on good. Before I move to the risk, like the risk like how I risk my risk model on good, let me show you these examples on charts. Like I say, price is very, very fractal. You can see them in any time frame, So now these days, I've been using lower time frame a lot on gold because of the peeps. Like I'm still coming back to that when we actually reach my risk model. The reason why I've been using 5 minutes, 3 minutes, 15 minutes entry these days is because I basically my advanced students should be able to understand this when I teach them the time frame switching strategy. You can switch when you do not see your entry, or probably your stop loss is kind of wider. You can switch down to lower time frame to pick an entry. So that will give you like more like a sniper entry, and then again, it's going to increase your win rate, like your risk to reward, and it's going to reduce your stop loss pips. So you don't have to, like, if you are trading small capital, you don't have to risk much with little pip, like with small pip. You understand? Most especially on good. So yeah, let's switch to 5 minutes. I think all these one are just on 5 minutes. This current one, I dropped it early this morning. Let me go back in time to the one we've done before. I want to show you the reason why I did not take my time in explaining all this, because I want to show you more on charts, on real life charts, how it look like on real chart. Let me start with the one that I just dropped. Before I go back, let me start with the one I dropped today in the group. Look at this. What type of entry is this? Look at this type of entry. When market has been selling from this region, right? You see a break of shows the downside, another break of shows the downside. Market creates an inducement. What does market supposed to do? It's supposed to respect this zone, right? It's supposed to be on this particular POI and sell. Look at what it did. Market violates it. And the moment market violates it, this is where price reach, and price creates an inducement, right? And this was when I was waiting in the early this morning. A market trigger my breaker block, which is this is a breaker block entry now. And look at how I actually I've already closed at 5 hour out. Yes, 5 hour out. My stop loss peep is more like 550 pips. Forget about this 450 you are seeing here. My execution is always 50 pips stop loss. So this is 5 hour out now. This is 5 hour out, 5.43. So market has already did you see very small one, very sharp one, very sharp one. This is a breaker block entry now. Let's identify it now. Breaker block BB, breaker block entry, right? So yeah, when you see the market change structure, market change structure. This is a bearish market now change structure. Break the what? The swing high aggressively, the lower high aggressively. That's supposed to push price to the downside. Break it aggressively. So market will now come back to mitigate it again, turning it to what? A breaker block. Look at this particular movement you are seeing here, the one that we just, like I said, price is very fractal. Yeah, we are seeing all this on 5 minutes time frame. Look at this movement. Look at this movement here right now. When market creates this break or stress to the downside, break this particular one, creates inducement here, come down here. The one that actually mitigates is still pattern. So this is an inducement now. So market come back to mitigate this other block now, right? So let's forget about this now. Let's focus on this one. So this is a break or structure to the downside now. This is a break or structure to the downside, right? A break or structure to the downside, and this is an inducement. You should know that the first pullback after this is more like a double top, a relative high. After a break of structure, the first pullback, we consider it as incomplete pullback, right? And that's our inducement. Is only most of the time is always our inducement. So we have our other block resting above here. Now, how do we know that this is our other block and not just some other candle? Let's pick the zoom tools to zoom it. Look at this now. The last bearish candle before the sell. If you actually want to pick this one, this is the previous high. This is the last high. Now, this is the last high. This is supposed to be the last sell, the last buy candle before this sell. But look at this. After this sell, market has come back to mitigate this particular candle here. So this particular candle has been mitigated. I've explained mitigated and unmitigated zone to the advanced class. I think, or if I have not, it's probably in my notes, part of the thing that I'm still gonna teach. If I have not, because I couldn't remember if I've taught them in the advanced class. That is where you now pick your this is this is a mitigation zone now. So like mitigated and unmitigated other block. So this particular other block has been mitigated. This was the zone that we were supposed to pick before because it was the last buy candle before this sell to the downside, but it has been mitigated with this candle. So this one is the one that is unmitigated now. So this unmitigated is the one that we are gonna pick. And if you pay attention to this, there's a fair value gap here. There's a fair value gap here. One of the criteria that we always use to pick our entry. There's a fair value gap here now, which makes it very like a very A plus setup. You understand? So let's go back. Now I look at what happened when market reached that zone. When market reached that zone, does it give us confirmation? Look at it here. This is the entry, right? When market now reach here, what does it give us? What type of candlestick confirmation does it give us? It gives us the what? The shooting star, which is the inverse armor. Look at it here now. This is the shooting star. So after the closure of this market, you enter the market. My stop loss is 50 pips, and you target at least 1 to 5 hour out. And do we have 1 is to 5 hour out? Let's see. This is 1 is to 5, 1 is to 5.11, 5.11. So let's drive it. So we have our full TP smash. So like that's how you pick your entries. That's how you pick entries when you are trading gold. Gold is very fast. Look at it. All these things play out today. This particular two entry plays out. All right, guys. There's a network issues. That's why I think we have network issues. But we are back now. Hope you guys can see my screen back now. Right? Can you guys see my screen and can you hear my voice as well? Please, I want to know in the chat box. Someone should talk in the chat box. If you can see my screen now, you can also hear my voice back. All right, good. Thank you. Thank you. So when market reached here, you saw this what? This is an inverse which is a shooting star you are seeing currently here. This candlestick. this candle you are seeing here. So it's a reversal candle. When this type of candle printed on your POI, just know that it's a good to go for you. It's a go ahead. So that was why we go ahead and we have 5 RR smashed. So this is a what now? Another block entry. Another block entry, OB entry. So you can just indicate it OB entry. So if you can look at it a lot, you need to consider the market trend. You need to consider the market trend. So in the sense that you check the hourly time frame, 1 hour time frame, 4 hour time frame, 2 hour time frame to check the overall trend because you don't want to be caught up when you are trading a reversal. You might probably be trading a reversal, and when market now want to continue the expansion, you understand, you now feel like you now feel like you hit stop loss back to back, you're hitting stop loss back to back, not knowing that you are already trading a reversal. You understand? You're trading a reversal before our market has continued. So you should know when market switch trend from the higher time frame. So all these are just lower time frame entries. So let's look at another one. We've seen the breaker block entry that I've explained. This is a breaker block where market has been selling and changed sentiment aggressively, come back to mitigate this particular breaker block. And this is an order block now. This is an order block entry and market just trigger here. There's one hidden here. There's one hidden here, but I don't want to complicate things for you. There's one hidden here. If you pay attention, there's one hidden here. This is a break of structure. I don't want to complicate this yourself to you, but you can go and practice. If you practice, and you're gonna see a lot of things. This is a breaker block. This is a breaker block that market just mitigate, and this is a first pullback which indicate the inducement. Market just mitigate it and sell downward, but I don't want to complicate things for you. You understand? So let's just leave that on that way. So you don't need to catch everything in the market. Just little one that you are able to catch, you are good to go. You understand? Just little one you are good. You catch in the market, you are good to go. So let's check. Let's check. This is a breaker block now. Let's check other ones. Let's check other ones. And I've been sharing all these to you guys. The one I did not share to the group, I would definitely tell you that I did not share this one. But the one I shared, I'll always tell you that I share it. Look at this type of entry now. What type of entry is this? What type of entry is this now? It's actually a continuation, like I'll call it OB continuation, like other block continuation. This is just this. Or you call it mitigation block. Where I confuse you because I use the word mitigation block for the advanced class. This particular entry you are seeing here, this one here, this one here. So market is selling definitely, right? Obviously, market is selling. Market is selling from this region. You see, market push up, break short to the downside, push a little bit up, break short again, first pullback rate and inducement. And when there's an aggressive break, we always consider the what the swing low. The swing low that actually occurs when there's an aggressive break. Look at this. This is the one that I was expecting. This candle here was the entry. This candle here was the entry. After this break, the moment we see an inducement here, I saw an inducement here, which is the first pullback. This one is the first pullback. I will know that, okay, I know that this is going to be our new entry, which is the mitigation block. So if you understand the hierarchy of PD array, premium and discount array, you understand this. Okay, mitigation comes before breaker or other block. This is a mitigation block now, and this is another block above it. This is another block above it here. This is a mitigation. So mitigation comes before other blocks according to the premium and discount arrangements PD array. So that's exactly what caused this entry. And you see this one is just a 10 RR setup normally, but I will not lie, I've already closed at 5 RR. So that's just this one. I don't share this with you guys. I don't share it with you guys. That was last week Tuesday. That was last week Tuesday. Yeah, last week Tuesday. I don't remember. I don't remember if I share it. I don't share it. I didn't. I didn't share it with you guys. So let's check another one. This is a mitigation entry. More like you could call it, people can call it breaker block or some stuff, but it's not a breaker block because market actually break this aggressively when market is still selling. So it is a mitigation entry. Just know that the liquidity is very close to your POI. The structure is bearish. Of course, we are looking for sell. The inducement, which is the liquidity, is very close to the POI. This is the POI now, a market sell-off. So let's look for another one. Let's look for another one. This one wasn't an entry. It was just a practice. And let me delete it. It wasn't part of my execution. This one, yeah, I shared this one with you guys. I shared with you guys on Thursday. Like 2 weeks ago on Thursday, I remember. And exactly this is what happened here. We saw a break of structure. This is a break now, right? Market come back. First pullback is an inducement. Now, just know that this is an inducement. The market is coming back to mitigate this other block. No matter how long it is, the market is still gonna come back to mitigate it. So now we have already know that this one is an order block entry. This one is going to be an order block entry. This particular one, because of the aggressive break, order block entry, right? This is a break of structure. This is an inducement. Now we have seen an inducement. So the next thing we should be waiting for is market to come and mitigate it. And exactly what happened when market comes here. I shared this with you guys. I remember clearly. I was targeting this eye before. Let me show you. Let me show you. If you go back to the group and check the images, you realize I was targeting this eye before. But when market come back to mitigate, I saw from the 4 hour time frame, this particular candle is an aggressive bearish. This one is also an aggressive bearish to this particular region. So I just closed at 2 point something. So yeah, I don't think I closed. It's actually a break even. Yeah, I was stopped out on break even. Yeah, yes. Yeah, I mean I was stopped out on break even here. I was stopped out on break even. So this is more like when market come back to mitigate this other block, this was the other block. I have a lot of things to explain here, so you guys should calm down and just focus on the explanation I'm going to explain here. So yeah, first thing is there's another block here. After this break of structure, there's another block here. After this break of structure again, there's another block here, which we have an inducement here, right? And it's played out. That's why I draw this line here. I did not take it, but it played out. This is an inducement. This is an inducement, right? You should know the reason why I did not take trades. If I did not take a trade, it's actually not my execution time. You understand? So I just mark it out. This is an order block now, and these are inducements. This is also an inducement right here. You get all these are structural liquidity, which is inducements, which are inducements after this break. So market come back to mitigate it and play it out first, right? Second one is this is also an order block when market has been selling. Market has been selling sell. First pullback is inducement. You should know that one. First pullback is only inducement. So market come back to do this. So market is coming back to take this one out. And exactly what you did here. Come and mitigate it here. And let's see if we have another confirmation here. Yeah, entry confirmation. We saw an entry confirmation, which is this bearish engulfing candle. So if you check the 10-minute time frame, these two candles engulf this particular one. So they are bearish. And in fact, this one actually gives us the valid bearish engulfing candle. Yeah. This one, if you don't want to consider all this one gives us the valid bearish engulfing candle, which if you want to enter, you can just enter from here. You just pick your stop loss to be 500 pips, 50 pips, 500 points. I don't take more than that on good. So let's just leave it like that. And let's see whether we have 1:5, 1:5. And exactly we have 1:5. That's a very, very aggressive. But I don't take this particular setup because it's out of my trading section. But I just mark it out that it plays out. Because you always know that, okay, always check if your analysis played out, whether it is your execution section or not. If your trading section or not, always check if it's going to improve your edge. It's going to improve your edge in the market because you know that, okay, at least your analysis, your setup always plays out a lot, even when it is not your trading session. So when it comes to your trading session, when you see that you printed on the chart, don't hesitate to take it. So this is an inducement, the first pullback when market is selling. And now when market is selling, market sell aggressive here. Market sell very, very aggressive here. The fact that this was actually my execution time, I did not execute this, but I think this our second admin Singers I actually called this trade and he executed it. He actually show you guys sent the signal out. Then I remember this cell, which is a breaker block. Now you should be able to tell that this is a breaker block entry now, right? Because after this break, this is a break constructed. When market come to mitigate this zone, right? See, market come back to mitigate this zone, break all this high. The moment you break all this high, market just violate it, come back to mitigate the breaker block again. So we call this a what? A breaker block entry. A breaker block entry. The moment you are practicing it on chart, you see all these execution are actually on 5 minutes. If you switch to 15 minutes, you are gonna see them there. If you switch to 30 minutes, you are going to see them there. If you switch to 1 hour, you are going to see them there. So you just know the kind of time frame. And I tell you the reason why I'm using 5 minutes and 3 minutes for entry these days is because of the stop loss peep, just for me not to be over risking, you get. So this is a breaker block entry. If you pick your entry from here, you get. So your stop loss will be a little above, maybe about 500 pips or more. This is it here. So if you wait for confirmation, let's check the confirmation entry. Let's check the confirmation entry. The confirmation entry was actually this. Let's see the one that gave us confirmation, and that is where we are going to pick our entry from. Of course, this is the one, this particular candle here. If you check very well, this candle is a what? Is a shooting star, this particular candle, so which indicates a reversal in the market. So this gives you about 500 pips now, a little above 500 pips, 50 pips stop loss now, and 1:5 smash very fast, even more than 1:5. This 1:5.95. So that's a breaker block entry for you. So I've given you multiple examples on all this. Even if you go back in time, we're going to see the same thing. You're going to see the same thing. This was a loss, I think it's a loss. If you go back in time, you're gonna see, is it that you're not gonna take a loss? Obviously, you're gonna take loss. You're going to take loss, but you have high risk to reward to cover for your loss. For example, if you take 3 losses in a row and you make one TP, which is 5 RR, so you make extra 2%, extra 2 RR. That's how this good and this strategy actually like help you a lot. And let's now move to risk management, the risk aspect of trading gold. Yeah, I think we still have time. The risk aspect of trading gold now. We have 10 minutes. Shit, man. I thought we have time. Let me talk about the risk aspect of trading gold. First thing I will talk about is know your stop loss pips, risk model. I will fact about it. Risk models, my risk model on gold is know your stop loss pips, SL pips, know your SL pips, because it's gonna determine your position size in the market. If you are trading a smaller account, let's say I want to use the least top loss now, the least account balance, because many of you think like it's one of kind of juju stuff when you see someone trading $10 and is able to like get $10 to about 40 something dollar or $50, and you see someone with the less than $5 or something to like $40 or $30 profit. It's not magic. It's because you know your risk. That's just it. You know that okay, if you have a $10 account and with my own stop loss pay, which is 50 pips, and anything that I have to give you 50 pips is gone. If you are using 0.0.01 lot size, so it's automatically equal to $5. It's automatically equal to $5. That's it. Automatically equals to $5. So if you are risking 50 pips, if your stop loss pip is 50 pips, your own can be less. You understand if you can refine your strategy to lower entry, like probably 3 minutes. This is 5 minutes. That's why I'm using 50 pips. But I love using 50 pips because gold is very, very volatile. It can just spike up, spike down. So I just leave my stop loss at 50 pips. So you should know that if you are trading a $10 account, if it is smaller account, you just know that you have to take just 2 trades to blow the account. 2 trades to blow the account. But if you are very, very good with this skill, if you are skilled enough, your 2 trades will not be lost. In fact, you make sure that your first trade should be the most the high probability setup, because if you start with profit, imagine you start with $10 and you risk $5, you get about 5 times 5, that's about 25, right? Your account is actually at 35, like 35, your equity is now at 35 now. Your balance is not $35. So you have enough, you know that your capital is now expand enough to like try more, two or three setup again. Even if you fail with two or three, you still have enough capital, because if your first setup actually lost, you just know that you are dealing with the last money in your account with the last setup. So you have to take high probability setup. You understand? So that's the logic. If you want to trade good with a smaller account, just pick high probability setup and know your risk. That's just it. It doesn't take too much. So this applies to bigger account as well. As for me, if I want to trade, I know that okay, if I want to risk $50, I know that I'll be using just what is 0.1 lot size with 50 pips. That's my risk model. That's the risk model. Just define your risk. Even if it is $50, just know that okay, you don't want to over risk. You want to be risking $5 to get $25, which is very, very cool. $5 to get to make $25 is a very, very rich to reward. It's a very, very big. I don't even know the word to use to qualify. It's a very, very big one. You get That's my risk model for you. You should just know that you can trade gold with smaller capital if you choose the right level, high leverage on your broker. Of course, XN is the broker that I use. They have high leverage, 1 to 2,000 leverage. You should be able to you should be able to execute good on a $10 account with 1 to 2,000 leverage. You get So yeah, if you just know that that $10 you want to trade is not money that if you lose you're gonna cry, because if you look two trades with 50p stop loss, if you look two trades, your account is gone like that. But if you are very, very patient, you are not taking any other pair like, okay, let me try this one. This one is playing. This one has been showing my analysis, this and that. Let me try this one. You are already now at minus something. You are already at maybe $8 or $7. You now see good that want to trade now. You now trade it. You now take loss. Your account is gone already. So if you want to dedicate your trading to just gold alone, gold is gonna help you a lot, normal, and it's gonna hurt you a lot as well. So just have the mind. Losses are part of trading. Losses are part of trading. They are inevitable in the market. So when you are practicing, you are gonna experience a whole lot of things. Experience, they cannot teach you experience. You can only experience experience. You understand? Like I always said, your psychology a lot is also part of trading as well. So and nobody's gonna teach you psychology. They can always tell you what their own experience, like what they have experienced when it comes to psychology in trading, when they actually at the stage, what did they do and what did they actually use to like curb the emotions, and that they cannot teach you. You experience it yourself, because my emotion might be different from your own. You understand? You might be risking more than me. Of course, if you have money more than me, you might be risking more than me. Probably you are risking $100 on a trade or $50 on a trade, or you're risking $1,000 on a trade. You understand? And me, I'm risking about $50 or $100 on a trade. You understand, or 150 or 200 on a trade. And you cannot compare the emotion of me risking $200 to you risking $1,000. That's very, very different. So that's why I said you experience psychology yourself. Nobody's going to teach you. The only thing I can teach you is like, okay, this particular thing is a strategy that I used to approach this, and it works multiple times because of the back test. And the strategy that I said is the structure, liquidity, and POI. The structure, liquidity, and POI. Here is it. The structure, liquidity, and POI. Couldn't find it again. Okay, it's here. Oh no. I don't know why this one is not closing. Structure, liquidity, and POI. Where are you? Yeah. Structure, liquidity, and POI. That's just it. Structure, liquidity, and entry. Still the same thing as POI. So that's the strategy. So the only thing that I can put you through is the strategy. If you don't have the strategy, you don't know how to approach the market with all this analysis stuff. That's when I can assist you with, and I can assist you with risk management as well. That okay, if you use this particular risk, this is what you're gonna get in return. This is how you will not blow your account easily. That is, you are out of ignorance like that. You already know what you are going to use to approach the market. You already know the amount you are going to be risking in the market. So the only thing you're going to experience yourself is the psychology. That's just it. I can only tell you that okay, when I was down, this is what I do, this is what I do, this and that. If you practice this, if you work for you, fine. If it don't work for you, you train yourself on how to how it's gonna work for you as well. So I think I've explained my approach to growth, and I've shown you multiple chart examples on what I used to see on the chart. You understand? I've explained multiple this thing for you guys. I've explained with multiple charts. Yeah, why is it not moving? Okay, it's on this Zoom stuff. Yeah. So that's just it. I think let me check time. Probably I could just take 10 minutes for question and answer. You get this session is ending in the next 1 minute. The next 1 minute. You know what? This is what I'm gonna do. If you are not yet in that our new Telegram channel, you get that our new Telegram channel. Go there now. The new Telegram channel that I just created. Go there now, and I'm going to create the question and answer zone that you can type your questions if you have, and I'm sure you are going to have questions. I'm doing that right away. I'm doing that right away now. I want to create this coming the discussion. Yeah, a discussion group. I'm going to create a discussion group. So if you have questions, you drop your question there, and I'm going to answer you. Please, if you spam the discussion group, if you spam it, I'm going to I will not hesitate to remove you from the group. I don't like opening the group because of those people that used to spam people. So your question and everything should be dropped here. All right, I've linked the group together. So I think there is a room for chat now. I don't know, maybe I'll get it though. I linked the two groups together. I've linked the two groups together. I think you can type. Someone should just go there and type now. Let me see. Maybe you can do that. So your question should be directed there. If you have further question about what I explained here, from the strategy to the risk management, to the entry model to the risk management. So yeah, we are going to be ending this live now. Thank you very much for joining, guys. See you tomorrow, and do have a profitable. Yeah, let me see. Is the recording still there? The record, yes, there's a record. I'll make sure the record is